So hi everyone. Today we have come out with our market outlook for the month of May and also for going ahead, how the market is going to shape up. And also during this presentation and post the presentation, if you have any query, please raise your questions. You can post and I can see those messages here and then I would be able to reply. So let's start this, the market outlook. So if you look at India, obviously in the last 1 month also, we have been more consolidating before, but in this month we have recovered. So almost 4% of recovery we saw in the month of April. And if you look at the last 1 year period also, so India has been able to outperform many developed or emerging markets. So it's 5.5% or 5.6% of return India posted. So there were some markets like China, Japan, Russia, and South Africa, which were above that. But you know that how volatile these markets have been. And India has been more stable, actually. And I think when you look at return per unit of risk, this has been one of the best markets. When I look at the exports position, because merchandise export has seen a turnaround in India. If you look at here, for a major part from 2012 till 2020, we had seen that the merchandise exports remain near $300 billion. But now we have seen that this figure has started improving. I mean, it improved to $422 billion in financial year 22. And even now, there has been some, hiccups because of the global slowdown. But even now, it is somewhere around $447 billion. So I think this is a structural turnaround than what we used to see in the last decade than what we are seeing now. So I think this is really encouraging from the India macro perspective. And this is really helpful to, improve our current account deficit, which was really scary when I look back in the month of September. Indian banking system, definitely it is in good shape because you can see from both the fronts, this is a profitable front and this is how the credit growth in the system is improving. So on the profitability front, what we are seeing is that the PAT is continuously increasing and it is increasing with a very rapid pace. Now, why it happened? Because we saw that a lot of NPAs went out of the system, which was eating into your profit, the provisioning, which was eating into your profit. And now we are seeing that with the more credit growth going up, the repricing of loans also happened, and that all resulted in the better NIMs for the banks. And that is the reason actually the profitability has continuously been improving. So there may be NIM shrinking possibly going forward because the repricing of deposit also will start happening. But our sense is when we look at the personal loan growth, which has really picked up very nicely, and we look at the repricing in the corporate loan book, then the whole equation seems to be that what NIM's market is expecting that it will get shrunk. If it does not happen to that extent, then the banking stocks will start reverting back actually very fast. So that is the reason the bank Nifty has been outperforming Nifty continuously. I will come to that slide also. So if you look at the credit growth, so obviously in the 2019, 2020, the part of 2021 also, we had 5% of credit growth, but now it is improving. Now it is somewhere around 16% average credit growth. And we have seen whether it is SME or retail, both of these segments have emerged very nicely. And the corporate lending actually is gradually picking up. The corporate capex also, the private capex also is gradually picking up. In this quarter 4 financial year 23, we have seen that there has been announcement actually from the capex perspective. If you look at Maruti, they are talking about 10 lakh units of further capex. And not only this capex, but the next one capex also they have started talking about. And this shows some kind of encouragement now because this is the consumer discretionary pocket, and where if the capex is starting, that means some kind of demand revival is definitely happening in these segments. So automobile is one where actually we are seeing this. So there are other segments also. Obviously, capital goods, the capex is there. In cement, we have seen that the capex is already announced. So that is where we have to see how this capex scene happens. Still, it is gradual, but 9-10% of growth we have seen in the corporate lending book so far. And this is what I was talking about. If you look at Nifty Bank, so it is almost reaching close to the previous high of 44,000. If you look at Nifty, it is still lower than this. It is still around 18,000 something, and the previous high was close to 19,000. So that means Bank Nifty is approaching its previous high very fast. And that is the reason that the outperformance of Bank Nifty over Nifty can clearly be seen here. This is a ratio of Bank Nifty to Nifty. So you can see here that after a long consolidation period, it is moving into a different territory. So that shows that in terms of price, because that is what important, we believe that Bank Nifty will be outperforming Nifty. So that means even if Nifty falls, some days you will see a Bank Nifty falling lesser. And when the Nifty recovers, you will see that Bank Nifty is recovering faster. And that is how this ratio will keep on remaining little higher. GST collections are continuously making new record. So 1.6 lakh crore was there in the month of March. In the month of April, we have seen a new record high of 1.87 lakh crores, which is almost 11.6% of year-on-year growth. And this is really increasing. In fact, if you remember, in September 2020, more than 500 crore turnover corporates, it was mandatory to do the e-invoicing. From the month of last October, we saw that it was mandatory to do the digital invoicing for more than 10 crore turnover corporates, and now it is going to be more than 5 crore. So why this is reducing that from more than 500 crore, now it is only more than 5 crore. That means more and more people, more and more corporates are adding up into the GST bracket, and that is where this number is continuously increasing and is sustainable. So if you remember, whenever the government comes out and budget for the forthcoming GST number, this is actually outclassing those numbers every time. So that has been the trend. So this year also, on a monthly basis, it was expected that it will be, somewhere close to 1.5. You are seeing the number has already moved beyond 1.5, and now it is holding. It has come closer to 1.87 lakh crores also. If you look at the e-way bill numbers, this is something leading indicator for the GST bills. We have seen that e-way bill numbers also have increased to 9.1 crores. So this trend is very increasing from the tax inflow perspective for the government. So government balance sheet is getting better. When the government balance sheet gets better, generally we see that the bond yields in the market, they start getting subdued. This is just on the domestic macro front. And that is what we are observing in India. Since the month of May 2022, we have seen that the repo rate is increased by 250 bips from 4% to 6.5%. But the bond yields have remained subdued. So 7.6% in the month of May last year, we had a 10-year GSEC yield, and still it is lower. So in fact, now recently, they have come down further. So this is how the bond yields are. So in the Indian markets, or certain banks which were collapsed. So that was a side effect of what we were seeing actually with the interest rate rising cycle, some of the side effects of that. So we have seen 4 banks actually in US have been collapsed, the regional banks. And but the government is very active. The US Fed is very active. They have done some dollar swap. They are providing liquidity. So the liquidity in the system, which used to be $9 trillion, again, it has come back to $8.72 trillion. I think this is high. And this is done just to, avoid this particular situation. And if you look at the Indian markets, continuously from the month of May, you can see here, the bond yields are making lower tops, and finally it has broken down. I think this is a trend which shows partly the global slowdown, and then partly the strong balance sheets of India, and another thing is the lower crude oil prices, because when there is some slowdown impact, we have seen that the crude oil, despite the supply cuts from the OPEC and OPEC plus, we saw that the crude oil has again come down to $75 or lower levels now. this is something that we generally have been talking about since the last 1 year now. I mean, that you can see here the 10-year and 2-year yield spreads from the year 2022, they became negative. When they became negative, people started talking about the recessionary period actually going ahead, because historically it is seen when the 10-year bond yields, becomes gets lower than the 2-year bond yield, that means the market starts expecting the recessionary period. And that is what happening. So we saw that 10-year minus 2-year became negative to 1.1 recently, but again it has recovered. It has moved to 0.45 now. So there is some recovery. And why it is happening? So you can say that to some extent in the bond market and to some extent in the equity markets, we have factored or we have priced in the some of the recessionary impacts in US. Definitely, I think because it has been a talk since the last year, mid of the last year, and we have spent now enough months talking about this. So the pricing also is getting factored. And that is the reason that even the 10-year, 2-year is still negative, but it has come back or reversed actually from a far more negative number. Dollar index has remained subdued. I think this is something that you need to give more notice now, because whenever the dollar remains lower, the emerging markets, they start seeing the foreign flows. And we have seen this, that in the in the last 1 month or so, we have seen $2.2 billion of flows coming in. I think this is increasing from the fact that India, which was more expensively valued, when you compare now with the emerging markets, our valuations actually have come down. Our premium valuations have come down. So we used to be 105% premium in the month of October 2022 over the emerging markets. And now we are somewhere close to 65, 66%. So they have come down. I think this is where the FI flows have started. And continuously, we need to see this, that where the dollar moved towards, because dollars looks like it has made the top near 115 and it has remained subdued now. So this is where the emerging markets can have a good time till the dollar remains subdued. From the USD INR perspective, if you see here in the month of September, we had the current account deficit of around minus 4.4%, and that time the USD INR hit the level of 83. But in the following months or quarter, we saw that in the month of December it was minus 2.7%, and you saw that it has come down. And then in the month of March, it came down further when it was minus 2.2%. So current account deficit is definitely a major indicator for USD INR right now. If the deficit is reducing, the USD INR depreciation situation is getting converted into some appreciation from the top levels. So that is what happening in USD INR. I think going forward, it is expected that financial year 24, the current account deficit can remain below 2% also. And in that case, the USD INR, our sense is it can remain more resilient. The credit default swap. So this is CDS. That is what we saw recently when there was a collapse of Credit Suisse, the European bank. And then we saw that when it happened, SocGen or Deutsche Bank, their CDS actually started moving up. CDS are basically the put options for limited expiry, and they are used against the credit given. So that is where when there is a lesser possibility of the credit coming back, the put options actually starts going higher. So that is what we saw. Their premium started moving higher. Recently, they have cooled off. So it seems it was more a knee-jerk reaction which happened post the Credit Suisse event. Now coming to the domestic sectors going ahead, because there is one fear of El Nino now, even though IMD has spoken about 4% efficiency, it is still not 10 or more than 10%, which was market was fearing of. But when it is only 4%, we have to see this actually very closely going forward. But in the previous El Nino's periods, for example, in financial year 16 and financial year 09, we had seen that if you see here, the cooling product companies, actually their revenues started moving much higher. And that is the reason that this time also the cooling product companies like AC manufacturers or others, their capacity utilization actually has increased. You are already seeing the impact of heat right now across the country, and then it is also followed by some of the rains. But we have seen that the utilization levels have increased from 70% to 90% in the cooling product companies. So if you look at the FMCG companies, the impact of El Nino, obviously it does not go well. So previously also it has impacted the FMCG companies more negatively. Right now we have seen some reversal in some of the FMCG because of the IMD numbers of -4% only deficiency, which is expected. So some revival has come, but if it gets deteriorated more, it will impact the FMCG companies also. The food grain production actually declines during the El Nino period, and that is where, if you look at the sugarcane production, because that also curtails down, and that is where we saw in the previous El Nino periods that sugar prices actually have moved up. And this is where the sugar companies can have a good time if these prices are again going to be elevated because of this event. So that is what we need to see, and that is what historically has been the impact, positive on cooling product companies and positive on sugar stocks. Coming to the vehicle sales, so we are seeing that whatever the pre-COVID numbers were, slowly the vehicle sales are coming closer. So already 98% they have come closer to the pre-COVID sales of total vehicles. So we are seeing this trend now slowly, and it is possible that within a month or two, we may start moving beyond the pre-COVID numbers now. Out of this, the passenger vehicles have given a record numbers. It has given a number of 39 lakh units almost. Previously, you can see in a single year, the passenger vehicles registrations have been somewhere around 28, 29, 32 or 33 lakhs. But this time it has made a new high of 39 lakh units. I think this is really encouraging. And from the electric vehicles perspective, because EV penetration in four-wheelers, we saw Tata Motors has been the leader with more than 80% of market share through its vehicles. And we have seen that Mahindra and Mahindra has also is also coming out with the EV SUV. So in the four-wheelers, the penetration of EV is increasing, but still it is only 1.1% what we saw in financial year 23. It is an increase of almost 50 bips from financial year 22 when it was 0.61%. The two-wheeler sales also have remained very volatile, but in the EV space, continuously we are seeing that it has seen a threefold increase when we see from financial year 22 to financial year 23. Ola Electric has really gained a substantial market share or growth, you can say, here in this segment. Our TVS Motor now is gaining up, and we believe the EV penetration in two-wheelers actually has moved from 1.74% to 4.4% now. So this is almost 2.5x jump. So it is much higher than passenger vehicles, what we are seeing in the two-wheelers, right? So in the month of March, we saw the total registrations of electric two-wheelers had gone to 75,826, which is 20% higher than the month of February. So this is a growing number, much faster growing number. And I think that is where the trend is very clear. In two-wheelers, the EVs are going to come or increase very fast now than what the market was expecting. Now, only thing is that the government subsidy, which the government used to give, if suppose some part of it is taken out, that particular period, we have to see how the sales growth starts picking up. Otherwise, the trend is on. And the companies which are launching their products, ultimately, they are also gaining strength in the stock price. So we have a very good example of TVS Motors, if they are keeping the price also reasonable for the EV. This is defense. In defense, we have seen that last year the number was somewhere close to 8,000 crores financial year 21. Then it moved somewhere 13, and now it is going to be 16,000 crores of exports. So financial year 23, it closed at somewhere close to 15,000 something. So this is a much rapid pace of increase in the exports and defense, and that is the reason that we saw the defense stocks again have recovered. Even though the government had sold 3-4% of equity in HAL, there was some hangover. But again, because you can see that the way the numbers are growing, these stocks also are recovering very fast whenever they are seeing any intermediate profit booking. On the domestic front, in the chemicals space, I think one of the most attractive bet right now looks like Fluorine Chemicals. These are the chemicals which are used in refrigerant, in air conditioners, and air conditioners have only 6% penetration in India. There is a large room actually for these chemicals to see a much better growth. In fact, there's a ban from the government now that the refrigerant gases cannot be assembled with air conditioners outside India now. It should be assembled in India, and that is why the market share of these fluorine chemicals companies is growing now very rapidly. The companies like Navin Fluorine, the companies like SRF, the Gujarat Fluorochemical. In fact, we have the numbers of Navin Fluorine and SRF here. You can see the CAGR growth, which is expected here. The total capital employed for a fluorine business by Navin Fluorine and SRF. That is how it is. Since financial year 19 to 22, we have seen that both of these companies have done a capex of 2,600 crores, and they are poised to invest 7,000 crores now, till financial year 25. Revenues also are growing very fast. So overall, we believe this particular fluorine chemicals story is going to be very good. It's a very highly reactive one, very difficult to handle. It is also used in battery fuel cells, and that is where the segments which are high growth segments, this particular chemical is likely to do much better on the domestic front. So if you see the companies like SRF, which has been a leader in fluorine chemistry, you can see the kind of growth we have seen there in the in the top line. This is the top line growth, and this is the EBITDA actually of SRF. So in the EBITDA part also, we have seen that it is really improving now much better. So from the last year, if you see financial year 22, it was 3,001. So last 2 years, 22 and 23, it was flat, but now you can see the shift which the market is expecting. Now it can be really sharp. So operating profit margins from 22 to 25%. That is what the expectation is getting built up now for these companies. Now, lastly, we have a certain slide on Chinese recovery. If you look at Chinese market, so it was expected that when the China opened up, there will be a sharp recovery, but still because the infrastructure or real estate actually is down in China, the recovery is still slow. You can see the steel prices, they have been in a very tight range for the last 1 month, mostly around 600 or something dollar per ton. The Chinese exports, we have seen there is some recovery in the recent period, but the India steel production also has increased. So which was almost getting flat, we have seen it has also started improving. And the HRC prices in India, which were used to be 855,000 rupees per ton, now these prices have moved to 60,000 rupees per ton. So this is where we need to see going forward. For the time being, there is a global slowdown, which is putting an impact actually on the metal prices. But eventually, when in China, the production will come up, but not to the extent of if the demand picks up. I think that will be a scenario when the steel prices can jump faster. So this is how we have designed our thought today. And I would invite the questions now. If you have any questions, you can ask me. Definitely we will answer your questions. I will wait for some time. If more questions are coming, definitely I will try to answer your queries. So I have got one query regarding the technology space, because recently the question is on Infosys and the impact. So yes, we have seen that Infosys has given the numbers, which was really disappointing, particularly the guidance. So 4 to 6% of revenue guidance was posted actually by Infosys for the coming financial year. And that is why there was a sudden impact actually on the stock. It declined fast. And, immediately we saw that the whole sector, which was already subdued, there was a further breakdown. So what we feel that there are 2-3 triggers that we need to be very watchful. First, the IT companies, they get their revenues from North America in 3 particular segments. One is retail, the other is BFSI, the third is the high-end technology. And the S&P numbers now, because Q2 it is expected to be bad. Q3 it is expected that the S&P numbers will start getting better. And that is where in these 3 segments, if the numbers are coming better, that may be the time that the IT companies in India, possibly they will be making some kind of bottom formation. So that is a very, very important indicator. Next is hiring. I think obviously hiring will be followed by that particular indicator only. Right now, the hiring is low, and that is where these companies also are, subdued. So that is regarding the IT companies movement. So there is, a query on the new age technology stocks, how they are going to shape up. So we have seen a lot of volatility in these new age technology stocks. In fact, if you ask me, the valuations in the market, stock specific in the mid cap space, in certain good quality stocks tremendously. I think where we are focusing more on those segments where the profitability is very clear, but they are down because of some of the valuations headwinds. And that is where we are waiting, and we will try to focus more rather than these stocks which are in the new age technology, because still the profitability is not coming back, till they are burning cash. I think they are more trading bets, and we need to build up more for a long-term investment perspective. I think that is where you need to focus more on cash flows, and that is where opportunities are there right now in the market. That is what we believe. So lastly, we have got a query on power space, the utility space, power, how it is going to shape up, because recently we have seen some of the PSU stocks in the market have started performing in the power space. So take the case of NTPC. NTPC, work on cost plus fixed ROE model. And we have seen that, that its capacity of almost 70 gigawatt in thermal, it is going to create another 60 gigawatt in renewables. And then it may be selling its stake to some extent. And it is going to grow its thermal to 130 gigawatt. The main trigger in the power space is there is a demand supply mismatch right now, it looks like, because the demand is growing very fast. I mean, we used to see the peak power demand near 200 gigawatts before. Now it is reaching 231 gigawatts. The total installed capacity is 420 gigawatts. Out of this, 180, 190 is of renewables, which has its own limitations in the evening time or so. But when we look at thermal and hydro, I think these two are the segments which are likely to pick up faster, because more capacity additions are going to happen here. And this is where it seems that the power space, because the electricity has reached to the villages, we are looking for more industrialization, pro-make in India. And that is where the demand for power actually is likely to remain intact at higher levels. So these companies are likely to, do better now. So there is a query last I will take on the auto two-wheeler stocks. As I discussed, auto two-wheeler, there has been a massive disruption of electric vehicles. We are seeing that it is the growing market share of EVs is continuously increasing. It had a growth of threefold in the last financial year. And that is where the companies which are coming up there with their better, a product faster, and also with a reasonable price, I think they are going to get the traction, because the bigger companies, they already have a wide distribution network. They will get benefit out of that. but eventually your pricing also has to be apt because you have many competitors now in this particular space. So that's all, from my side. So that was a view we had on the markets today for the month of May and going forward. And so thank you very much. We will meet again. We will discuss about the forthcoming markets in the next month outlook. So till that time, thank you very much.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from ICICI Direct.